when I first came back from, well, in New Zealand, from the United States as an AFS student, and I spoke to my father's Rotary chapter in Wellington. I'm really pleased that you didn't have the same food on the menu. They had tripe and onions. And I can tell you they looked forward to it. I don't understand this, but I do know that I have a son who's a chef at the moment, and clearly offal is coming back. It's beyond me. I think it's really poisonous stuff, but anyway. No, I'm not sure how many people have actually heard of the Banking Ombudsman. So, has anybody not heard of the Banking Ombudsman? I don't want to repeat information that you're already aware of. So, most of you have heard of us. So, just the very basics that are important. We're free to customers. We're an independent service to help resolve disputes between customers and their banks. We are funded by the banks. But we do have some, what I call wannabe banks, which are non-bank deposit takers, but they have to be registered by the Reserve Bank and to have a minimum credit rating of BB, so we have just a few of those. The scheme is 21 years old on the 1st of July, so we've been around for a while. We can award up to $200,000 in compensation, plus about $9,000 in convenience, and we cover both small business. But we actually don't make that a statement. Anybody can come to our scheme, whether they're a business or whether they're an individual, but they can't actually be claiming for anything more than about $200,000 in losses and $9,000 in inconvenience. We have a new chair. Our new chair is Miriam Dean, who took up the role as of the 1st of June. Beverly went and stole our previous chair, Bev. There she is. Ron Patterson has gone to work with Dame Beverly as the Ombudsman at the Parliamentary Ombudsman Service after a very distinguished career at the Health and Disability Commission, and after an amazing contribution to our scheme for the last 3 years. We also have Peter Clare, who's the head of Westpac, Kevin Murphy, head of TSB, Sue Chetwin, who's head of Consumer New Zealand, and Mary Home on our board. So a board of 5 with an independent chair. The important thing, which has been a real challenge for us over the last, well, probably ever since the scheme started, was making sure that consumers understand that we're actually not advocates for consumers. Nor are we, on the other side, apologists for the banks. So we're there to provide an independent means of resolving problems when customers can't resolve them with the bank themselves, or they feel they need some assistance to do so, or they want an independent view. So our slogan is, trust us to be fair. Very like the Parliamentary Ombudsman's slogan, which is about fairness for all, is that right? Yeah. I'm the 3rd Ombudsman in 21 years. I was the first non-lawyer, but I did have some relevant background at the Commerce Commission. The biggest challenge for me, which I faced on day one, really was making sure that I changed from a regulatory enforcement mindset into one which focused more on resolution. And believe me, it's a very big change, and many consumers would like me to be more enforcement focused. They'd like me to be able to punish the banks from time to time, but that's not what we're about. I entered at a fascinating time. I'll just see if I can bring this up. Can you see that big spike in the middle there? Okay. That's talking about investment and superannuation complaints, and the one to the right of it is actually talking about property-related complaints. You can see what happened as a result of the global financial crisis. So what I want you to do for a minute is just to picture somebody who has not been in the role for 14 years, who's faced with some pretty novel issues, who within 7 months faced a waiting list of 521 complaints, mostly to do with investments, who'd been told not only that she had to find new premises, but that it was a newly competitive industry. All providers of financial services must belong to a dispute resolution scheme. There are now 4 dispute resolution schemes, of which we are one, and it's actually the financial service providers who choose where they want to go. I'm the smallest scheme, we have 16 or 17 members, and yet we have the largest number of disputes. So from a competitive point of view, it's on the one hand it's difficult, and on the other hand it's obvious. The obvious part of it is that we focus on being the experts in resolving disputes in banking and banking services. And so we also, just as to give you a sense of where we position ourselves, our aim is very much to listen, to resolve, to learn from the resolutions so that we can actually help to prevent disputes from arising, reduce the number of disputes that come into our office, and improve the banking service. So that's that right-hand bullet. This is actually our vision statement, or our vision on a page. You don't need to read all of it. I really just wanted to bring your attention to the bullet diagram. So there I was faced with all of this. I was new. Within a couple of months, I learnt that a couple of my senior staff, the 2 most senior staff, had been picked off to start one of the new dispute resolution services. So immediately you've got, 30 or 40 years worth of experience walking out the door. And you've got 521 disputes to resolve. So one of the first things I decided was that we had to move from a me to a we culture. And Bev has been really helpful in helping me to do this as well, talking from time to time with Bev. But the way that our terms of reference are written, everything about my job, I was expected to be it. And in order to actually become more modern and to move forward and to cope with the new environment, I had to start delegating, and I had to start expecting more of my staff. Now, in an environment where you've already been challenged as to whether you were the right person to be put into the job, that proved to be a very, very difficult task. So that's been a lot about my mission over the last 4 years. What I can tell you is that right now, on almost any objective measure that you look at, the scheme has turned around significantly. We have no waiting lists. We're now resolving disputes more quickly than at any other time. Our customer satisfaction levels have more than doubled as a result of a lot of the initiatives that we've put in. Staff satisfaction we're now in the top 25% of organisations, whereas a year and a half ago they were telling me that they didn't have a lot of confidence in my leadership. And that was primarily because I didn't have the technical expertise, so that whenever they had a problem, they couldn't just come to me and get an instant answer. I had to change that culture so that people were actually taking more responsibility for trying to work out their problems themselves and coming to me with recommendations rather than always with the answers that they were looking for. So we've been through a very big and very significant renewal over the past 4 years. That's the management side of things. In terms of the actual complaints and disputes, what's been happening? Well, you could see from the other slide that if you think of that dark blue line, the big tall one as being 2009-10, the 2011-12 results show that we're no longer looking at investment and superannuation. The majority of our complaints are still property related, but we're back to a more classical pattern where you can almost say that if you think about a banking service and that anything can go wrong with it, anything can go wrong with it. And so we cover the whole gamut of issues and mistakes that happen. But primarily they are property related. And we're still coming off the top of the GFC. So you can imagine that we're still getting a lot of mortgagee sales complaints. Things like, you should never have put me into mortgagee sale, you should never have lent to me in the first place, you won't accept my repayment proposals, you didn't try and get the highest amount possible for my property, you should have deferred 2 years before you put me into mortgagee sale because properties would invariably rise, the timing was wrong. All of those, you charged me an early repayment cost when I didn't choose to go into mortgagee sale, you put me into mortgagee sale. Those are the types of complaints that we've been dealing with recently. And of course the other major trend has been away from sort of physical banking to much more electronic banking. So the nature of the complaints is more around you get problems with things like people putting in the wrong numbers for bank accounts and not being able to retrieve the money, those sorts of issues, or direct debits, problems with direct debits, automatic payments. We're not striking any problems yet really with mobile banking, and I have to say that I'm quite a fan of mobile banking, and the reason I'm a fan of it is that I personally can keep much better control of what money I've got, what's coming in, what's going out, and what my balance is at any time, so that before I get to the checkout, I know I've got at least $100 in my account, or I've got $200 and I'm not going to go into overdraft. So that's what I think, that's why one of the reasons I'm really very keen on mobile banking. So with the benefit of 4 years to look back over complaints and to think about why they happen in the first place, and in some respects what some of you people can do too to try and reduce complaints. I think that most of the problems are caused actually by a lack of financial literacy and by assumptions, usually incorrect assumptions. Mistakes also happen, and in my experience it's pretty rare to find that a bank has done something deliberately wrong. Problems often arise from what has not been said rather than what has been said. So why do they arise? What are the different kinds of situations? I think that customers assume that banks will look after them, that banks will move money from one account to another to avoid overdrafts. But actually the responsibility is borne by the customer to manage their own accounts. Customers often also think that investing in a bank is risk-free. I'm often reminded of the fact, I often hear my grandfather talking to me about what happened in 1929, and I'm often reflecting on what happened to the banks overseas and how lucky New Zealand was actually to have had a reasonably sound, or a sound banking system, and to have been supported by the Australian banks. That saved us. And minded of Alan Bollard's comment that we were really only 3 days away from a pretty serious crisis. Don't think I'd like to have been him at that time. Customers also tend to assume that things don't change, that banks may have been generally supportive of a 5-year business plan, for example, when it was first presented. The business will invest on that basis and borrow, but then the market changes and the bank's priorities and their criteria will change, and they may be no longer prepared to support a business plan to the extent indicated earlier in the process. So people do tend to forget that banks actually respond to market conditions. And customers sometimes will also take risks. So, if you remember back to buying your first house and the thought processes that were going on, can I afford it, can I not? Is it going to be tough, but I can rely on capital gain? because I'll continue to, to benefit from this. Sometimes, unfortunately, we face situations where people have provided overly optimistic or inflated income information. There's been a lack of disclosure about liabilities. We've also faced situations where mortgage brokers have, unfortunately, and this will be very few, so I don't want to be negative about the mortgage broking industry at all, but unfortunately there have been some rogues in that industry that filled out applications for finance fraudulently. They inflated income, they said that there were rental investments, they said all sorts of things, and in some cases, unfortunately, they even forged signatures, unbeknown to the borrowers. And in those circumstances, the duty to be honest actually outweighs a bank's duty to look in behind the figures and make sure that the returns or the information that they're being provided with is 100% accurate. And unfortunately also customers sometimes bury their heads and leave it too late to take action on their personal financial situation. Now, I don't want to be critical of that because I do understand how difficult it actually is when you get into that situation. But if you can help people to get in early, to go into their banks early, preferably before they actually default on any payments. If they get in before, under the current law, then the banks must consider reasonable repayment arrangements. It's the sort of thing which is, as extended family, you can keep an eye on. On the other hand, you find that bank staff actually forget that customers are not always as financially literate as they are, and they don't always get all the information they needed. And the best example of that, I think, is the early repayment costs. So a lot of people went in just before the global financial crisis started, 2007, 2008, in an environment of rising interest rates. They wanted to make sure that they weren't going to get into trouble, and so what they did is they fixed their interest rates at, say, 8, 9, 10%. And for 5 years, in some cases. Well, we all know what happened in late 2008. Interest rates fell faster and further than at any time in my lifetime. And so people got caught with these long fixed rate borrowings, 8, 9, 10, close to 11%, and they suddenly went down to 5 or 6%. People wanted to get out, and in many cases it hadn't been explained to them that they knew that there would be early repayment costs. That's clearly spelt out in all of the literature. But what they didn't know was that if they fell fast, and they felt that the further they fell, the higher the early repayment cost. So those people who went from 10 or 11% down to 5% were sometimes faced with $30,000, $40,000, $50,000, $60,000 in terms of an early repayment cost. And they said they were never told about them, or they were told they were only going to be $300. Well, by and large, they would have been told that the administration fee was $300, that they could pay an early repayment fee if it went up, if interest rates went down, but they were never ever told that if they went down a long way, they could pay an awful lot of money. So I think that when they were factoring in their risks, they were overly cautious, and they clearly thought that interest rates would continue. And it's fair also to say that not all bank staff are well trained. Some do fail to follow procedures or policies, and on very rare occasions you might actually get a rogue employee. But it is rare to find some form of deliberate systemic failure. So as part of our Oh, that's all right. I thought it was going backwards. I must hold it upside down. Part of our mission about learning from our resolutions is that we produce a lot of resources. So we've recently redone our website, and I really encourage you, if you, again, for yourselves, or if you've got friends and family that need information about banking and the sort of issues that you come up against, we've produced a lot of quick guides, what we call quick guides, and the latest one that we've produced is around guarantees. This is an old chestnut, but a lot of people don't really understand how these work. They don't understand, for example, that by signing a guarantee that they're liable for all debts to the bank, that for the person that they've guaranteed or the business, that the company might have incurred, and not just any specific loans. So you help your son or your daughter out, the liability is not limited to that specific loan, you're guaranteeing all debts to that particular bank. It can cover lending that's been made without your knowledge and without added security. And it's not a last recourse. In other words, the bank doesn't have to go through other steps first to try and recover. They can come straight to the guarantors. Now, it doesn't always happen, but they are able to do that. And the bank can deduct money from your accounts to pay any shortfall. So guarantees are the sort of thing that we're out there at the moment telling people about. If you're thinking about entering into a personal guarantee, try and limit your liability. It may not be possible, but try and limit it to that particular lending. You can always ask, but certainly get independent legal advice before you get in there. Otherwise you can be caught big time. And we've seen some very, very big consequences for individuals who've been caught. So I would encourage you to visit our website for any information. There's some great stories there as well, and do refer your family or your friends. If they've got any issues, we're certainly there to try and help. We can't always guarantee that people will get what they want, but we can certainly guarantee that they get a great explanation, and we can certainly, they can certainly trust us to be fair. Yeah, we do, and one of the things that I introduced last year too was that for every dispute that we actually resolved, we go back to the banks and we ask them what changes they've made to their systems or anything else that's changed as a result. So, because we want to get the feeling that the banks are listening and are trying to improve their systems. And we get some great stories out of that, and you know, where things like, we had one bank where we proactively, actually, out of a complaint, not a dispute that we've resolved, went to them and said, hey look, the information on your website about international TTs, about sending money overseas, is not as good on your website as you would get in branch. Now you need to be able to tell people that at the end of the day what they send may not be what they think they've sent, because other banks along the way, intermediaries, might clip the ticket and there might be additional costs. So you think you're sending XYZ, you know, $200, it might end up being $195 or $190. So you need to make sure that the full amount that you want to send is actually what's going to be received. So we also do a lot of analysis on the disputes and the complaints that we get. We categorise them. This year we've just gone back, and for the first time in 21 years we've decided that life has changed and we needed to take a fresh look at how we were categorising our products and our problems, and we've got a completely new set now moving ahead. They're not, when I say completely new set, what I mean is we have a fresh set. We've still got some of the old problems, but we've got new ones, and so we're now much more, we're including things like, more specifically, the debit cards, the travel cards. We're able to see what might have happened as a result of mobile banking. We include megatrends or meta-trends now, so that if we've got something that we think we need to keep a watching eye on, we'll flag it as a mega trend and or a mega matter rather, and follow it. So there's lots and lots that we're trying to do. And that is actually part of our strategy, because of focusing and being the best that we can be in resolving disputes in banking. Well, the heaviest hand really is to make an award against a bank. In other words, if we can't facilitate a resolution, and the best way really is to try and facilitate an early resolution without having to resort to pen and paper. But if we have to write a decision, we write an initial assessment, both parties have got the opportunity to comment on that, we take those comments into account and we write a recommendation. Now, the way that our scheme works, if you write a recommendation, the banks have to accept it. If they choose not to accept it, we can make an award and they have to pay it. But that is, the ultimate sanction, and they are named in the annual report. But by and large, we're about resolution. We're not about trying to create a tension between customers and banks. There are plenty of times, Russ, when I would really like to be in their pocket. I'd like to have much better funding, thank you. But that's a facetious response. The first and most obvious thing is that we are a separate independent company. We have an independent chair, we have an independent board that's balanced. My terms of reference say that I set the agenda. I decide how things are going to be resolved. And the banks can't actually come back at me and say, we want you to do this or this or this. And of course we publish our case notes, we publish, so they're there for people to see. We try and be as transparent as we possibly can. Aside from that, we have...
Do they cut their fees if they're unhappy with what you're doing?
No, they haven't cut my fees. By and large, the banks have been supportive of the scheme, and they understand that if our scheme loses credibility with the public, then they lose credibility as well, and they lose they can't be confident about where to send their customers on. So by and large, they are respectful of the scheme and what it's been set up to achieve, and I don't have problems with them. One of the things that, coming from an investigative background, that I've been very keen on is making sure that our investigations are as rigorous as they can be. And they don't always like us going back and asking for additional information. They like to try and sometimes control what information comes through to us or decide what is relevant. And I say, no, I decide that. I decide what information we need to resolve the complaint. Please provide us with X. So, those are some of the ways in which we try and maintain that independence.